to allocate? It's complicated. There's so many cryptos. Well, if you just want to keep it simple, just buy Bitcoin, go to the beach and don't do anything. It'll outperform any business that you ever create in terms of annual performance. I mean, that's a horrible thought that I've realized. But at 150% performance, even if it comes down to 50% a year, most businesses don't grow at 50% a year. So it becomes very difficult to even justify starting a business, which is a bit weird. But really, how I prefer to see this space is it's a broader adoption than just Bitcoin. Bitcoin is one of the big use cases, but it's not all of the use cases.
Macroeconomic strategist Raoul Pal shared his outlook for cryptocurrency investors amid the recent market volatility, emphasizing that patience and sound risk management are essential to surviving this correction. Paul described the slowdown as part of a normal upward correction driven by tightening global financial conditions. He explained that financial conditions tightened last year due to the rising dollar in anticipation of Trump's election and rising rates in anticipation of potential tariffs. His main advice is about risk management. If you use leverage, you will end up bankrupt and lose control of your tokens. Paul referred to his M2 money supply model, developed with analyst Julian Battella, which accurately predicted Bitcoin price fluctuations with a 10-week lag. Regarding Solana USD 53% drop, Paul dismissed concerns about the asset failing. According to Raoul Pal, the easiest way to 10x your wealth is to just hold Bitcoin Solana for the long term. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Blockchain and crypto have lots of narratives, and people latch onto different ones. The one that I found resonates with people who are not in it on the money side, but just want to understand the technology. This is the new version of the internet. It's called Web3. Whether that name changes over time or it sticks, it's irrelevant. But the point being, it's just the new version of the internet that we need for the present times. Now, the internet was the greatest technological boom of any of our lifetimes and one of the greatest inventions of all of humanity. Now, none of us could participate in that. Think of all the wealth that got generated in Silicon Valley, where I am today. I mean, there is staggering wealth here. And most of us didn't participate. We became their product. Now here, the magic is how blockchains work is they have an economic incentive system, which is a token. And that economic incentive system incentivizes you to use a network. And the more you use the network, the more of these tokens you get, and also the more they go up in value. Okay, so firstly, you need to throw out everything you understand about investing. Everything you've ever been taught, everything your financial advisors told you, throw it out. They tell you run diversified portfolios, do this and that, and running stop losses, all of this stuff doesn't work in this. The reason Jeff Bezos is one of the richest people in the world, or Elon Musk, is they don't sell their shares. And that's what you have to do here. From 3%, $3 trillion to $100 trillion. That's the game number one. That's not trading around it. That is not using leverage to try and juice extra returns out of a asset class that produces la-la land returns anyway. You don't need leverage. You just need time.
Paul also claims that the declining US dollar will be a positive sign for cryptocurrencies in the second quarter of 2025 and hopefully in the second half of the year. He claims that the weakening US dollar could boost the cryptocurrency market in the second quarter of the year. With the declining dollar, interest rates, and oil, financial conditions are rapidly improving and outperforming risky assets by a few months, Paul said. The announcement comes just a day after U.S. Treasury Secretary Scott Bessent outlined his vision for lower interest rates in the U.S. This should herald a strong second quarter for the technology and cryptocurrency sectors, and hopefully for the second half of 2025 as well, if these trends continue. Since 2013, the second quarter has been the third best quarter on average for Bitcoin, with a return of 26.89%, according to CoinGlass. Paul said that of these three factors, the US dollar is the most determining factor in the cryptocurrency market. When the dollar weakens, investors often look to alternatives, such as cryptocurrencies, to protect their wealth. Raoul Pal and FundStrat co-founder Tom Lee analyzed Bitcoin's role in the global store of value market, estimated at between $400 and $500 trillion. On March 13th, Messrs. Paul and Lee explained why Bitcoin is still in its early stages of growth, with the potential to capture a significant share of this global store of market value, estimated at between 400 and 500 trillion. Lee, who notably analyzed the rise of the wireless industry in the 1990s before launching Fundstrat in 2014, explained how Bitcoin's rise mirrors the adoption curves of major technology networks. Considering just two factors can explain more than 90% of Bitcoin's growth, Lee noted, comparing this growth to the massive value creation by social media platforms. Despite institutional skepticism, Lee and Fundstrat backed Bitcoin as early as 2017 when it was trading near $1,000. Both Paul and Lee remain very bullish on Bitcoin's long-term prospects. They estimate that Bitcoin and digital assets could capture a significant share of the multi-trillion-dollar global market, implying potential growth of 400 to 500 times greater than current levels. Paul points to Bitcoin's historical correlation with the global money supply, M2, which suggests the cryptocurrency is poised to embark on a significant surge. He acknowledges that cryptocurrency markets have been under pressure due to the strong U.S. dollar and rising interest rates in late 2024. However, he says these conditions are changing, with financial constraints easing and M2 returning to record levels. According to him, the current downturn is nothing more than a routine market correction. Paul draws a parallel to 2017 when Bitcoin experienced a similar trend during Donald Trump's first term as U.S. president. At the time, Bitcoin initially suffered a sharp decline due to policy-related market reactions, such as a strengthening dollar and rising rates, before staging a strong recovery with multiple rallies. Furthermore, Paul believes Bitcoin's price action remains confined with a logarithmic regression channel, a technical framework used to assess long-term market trends. It suggests that while Bitcoin will continue to move upward within this structure, it remains uncertain whether it will remain near the central trend line or break above it as the current cycle evolves. Paul predicts a radical transformation in the global economy and financial markets driven by accelerated technological change and a new political landscape. He presented a transformative vision for the global economy, characterizing the coming years as a transition toward an economic singularity. He described this period as one in which accelerating technological innovation in AI, robotics, and blockchains is fundamentally transforming markets and global economic systems. Paul remains steadfast in his optimism about the cryptocurrency market and predicts its valuation will explode from $3 trillion to $100 trillion over the next decade. He emphasized that blockchain is the backbone of the digital age, enabling digital scarcity and efficient global transactions, which he considers essential for future financial systems. Cryptography is the architecture of the digital age, he said, highlighting blockchain's central role in transforming how value is exchanged and stored.